Hello, everyone. My name is Bethany Kay, and I am a Strategic Alliance Manager at Avalara. And today we're going to talk about the six-step approach to sales and use tax compliance. Now, the very first step in solving a problem is to recognize that it does exist. I really consider this step zero before we get started. I'm hoping today we can get here with all of you to recognize that there is a good chance that this problem does likely exist and you won't put your head in the sand. Okay, step one in the process is Nexus Determination. The most important step is understanding where you have obligations to collect and remit tax. Now, I want to make sure everybody today listening has an understanding of what nexus mean, and that really is a connection between a seller and the state that requires the seller to register and collect and remit tax in a state. And there are going to be certain business activities, including having a physical presence in the state or reaching a certain sales threshold, dollar value threshold, or transaction volume that may establish nexus within a state. And actually what the latter I was speaking of was called economic nexus. And these are not so new anymore, but relatively new. About 3 years ago, there was a Supreme Court case called Wayfair versus South Dakota, which many of you may have heard me talk about before. And the Supreme Court ruled in favor of South Dakota and passed these economic nexus laws, which are based on a dollar threshold or transaction volume. In South Dakota, it was $100,000 or 200 transactions. And now all states have filed suit except for one, that's Missouri, who has pending legislations. And there are 5 states that don't have sales tax. New Hampshire, Oregon, Montana, Alaska, and Delaware do not have state sales tax. Alaska does have locals. So understanding nexus, the thresholds, economic nexus are relatively new, and then how to apply them. You're going to review all your sales by state, get that together. And then you're going to identify and quantify those material states. If you have in-state physical presence, those are definitely going to have transactions are going to be subject to tax. If you don't have an in-state presence, a physical presence, then you're going to look at those economic thresholds and effective dates and all those rules. Now, in this process, we highly recommend you don't do this on your own. And you have a couple of choices. One is to work with a CPA to do a formal nexus study, and not just any CPA, one with a state and local tax practice, which we call a SALT practice. They'll help you determine your nexus footprint for sales and use tax as well. Part of their nexus study is very comprehensive. It'll look at income and franchise taxes and gross receipts taxes. At Avalara, we have a tax advisory services group that does what we call a sales tax risk assessment. It's a little bit on the lighter side from what a formal nexus study would be that a CPA would perform. It doesn't include income or other taxes. And what's important to note about that is it may be good for some businesses and all you need. For others, your income tax liability may be greater than sales and use tax. So make sure you have, a full picture of what your nexus is. Now, one of the other things is, hey, educate yourself. Just going into this, there's some online resources that are really great. And one that I will share with you, of course, is Avalara State-by-State Economic Nexus Guide. And as you can see, our Nexus Guide, you can scroll through and choose whatever state you want and find out what their rules, like if I were going to Texas, you can see what their transaction volumes are, when their enforcement date is, it's $500,000 threshold. So it's a great resource for you. All right, step 2, taxability evaluation. Again, this is actually something that we don't do in-house at Avalara. That is where you'd want to consult with a SALT CPA. And for those of you that have maybe more complex or various different products and services, you may want, and especially something that's on the cutting edge of technology, this is something that you may need to do or we recommend doing if we start talking to you in a sales cycle. We partner with lots of CPA firms, including Big Four that I work with and some local firms. So if you don't have one, we're happy to provide a list of referrals for you. So what do you need to know in a taxability evaluation? It's the who, what, where, when. What are you selling? Who's your customer? Where are you selling? And when. Sometimes tax holidays can come into play. Now the what is the bulk of it, right? It's the first key item is, what are you selling? Is it tax or is it exempt or partially, right? Sales of what we call TPP, tangible personal property, something that can be touched and moved, seen, are typically subject, now I would say typically it's an overgeneralization, but that's going to be subject to tax unless it's specifically exempted. On the other hand, services are generally exempt, although many states tax all types of services, including software as a service. And a state like Hawaii taxes everything literally under the sun. So just beware that a lot of people assume services aren't taxed, but that's why you want a CPA taking a deeper dive. For example, there's really some discrete distinctions. If you are a repairman, the treatment of your services may really vary whether you're doing repair services or maintenance services. Also, some other things about the what are discounts, coupons, delivery charges. Sometimes those are included in the sales price, subject to tax, and sometimes they're excluded. It just depends and varies state by state. So the who is another part of that picture of the taxability evaluation. Is the purchaser exempt, maybe because, or is the sale exempt, maybe because of the purchaser entity type? Maybe it's a government you're selling to, a nonprofit or charity. Sometimes states are prohibited from taxing sales directly to governments, to federal governments, for example. Or maybe the sale is exempt because of the type of industry. There are states that exempt certain industries like manufacturing or research and development, and sometimes high tech. Or maybe the sale is exempt because of how the purchaser plans to use the product, like in manufacturing and research and development, or they're going to sell it for resale. They're going to have it for resale. But at the most basic level, the important thing to note about this is if the purchaser is exempt, it's their responsibility to declare at the time of sale their exempt status and provide you as seller required documentation. Usually it's an exemption certificate. If that doesn't happen on an otherwise taxable sale, you, the seller, are going to be liable for tax. And on the where, between the seller and customer maybe being at different locations, does the transaction involve a drop shipper? That can be a real pitfall. Where, which jurisdiction has the right to tax the transaction at which rate? A couple of common pitfalls. One, I mentioned drop shipping, which I won't go into today. Bundling, you really got to watch out for. Bundling tangible personal property and services. Those two could be differently formatted on invoices. You could have a bundled grouping and a non-bundled with everything itemized, and that will impact the taxability of the services you provide. All right, so let's move on to step 3, quantifying that exposure. Again, recommend using a CPA for this. You're going to take that, they're going to take that historical data using a taxability matrix. They're going to quantify that liability, that tax liability. They're going to calculate interest and penalties. And then they're going to have some recommendations, and you're going to have to look at your business risk and determine kind of the order of which you're going to tackle state by state, whether it's going to be through a VDA, a voluntary disclosure agreement, where it will limit the look back period for those taxes and limit the penalties. Usually interest is always going to be there. And then maybe you're just going to register a file prospectively. You're going to have to take into account what your business risks are. So this is a simple chart, what you'd maybe see in the exposure analysis. You'll see all the jurisdictions on the left-hand side, the type of nexus, whether it's physical or economic nexus. There's other type of nexus that may have triggered your requirement to collect in that state. When did nexus start? Are you already registered there? Are you already collecting there? What are the gross sales? And what is the taxable sales? From the gross sales, you get to taxable sales, and then you calculate the tax, interest, and penalties. And usually it goes from greater down to maybe none. And for those great liabilities, you're going to want to do a voluntary disclosure to limit your look back periods and your your penalties. Again, something you're going to want to do with a CPA. And again, the next step, once you get that all done, you're going to figure out how to disclose all of this to the state. And with your CPA, they'll review all the state guidance on their remediation programs, determine the best program based on your fact pattern, and they're going to pay attention to things like the format of the request by the states, whether they have online applications or it's something to be written in, what the look back periods are. For example, Hawaii has a 10-year look back. Typically, it's 3 to 4 years for most states. Maybe there's other disclosure requirements like disclosing your org structure or your list of all affiliates. And then you're really going to want to consider all the taxes as part of this process. You're going to have to disclose maybe some deal with income and franchise and other local sales and use tax. Okay, before we, before you sit down, and step 5 being your tax system selection process, before you sit down for a software demo, document what your current process is and what the cost is. You want to estimate the cost of doing business today with those liabilities sitting on the books. Put a dollar value on it, and then that's a great thing to do as you come into demos and start getting prices for solutions. You can really compare, here's today's state with this existing risk, and here's tomorrow's state and the cost with zero risk or virtually zero risk. And that will really help you if you have to take this proposal to a board and decide on a solution. You can put some dollar value in the return on investment. So the next thing I suggest is making a scorecard, and you can put down things like identifying your key pain points. Is it exempt sales? Maybe you don't have any taxable sales and really you need exemption certificate management. Or is it finding the right rates because you're all over the place and you're worried that you've got the wrong rates? Or maybe returns. You don't have enough people to do returns and you're trying to do it manually. Do you have a software? You're going to want to ask the software, do they have the content for all the products and services you have? Do they have pre-built integrations to decrease the time for implementation? Is that user interface easy to use and understand? And what kind of support is available? So these are all things to consider when you take a step into deciding a tax software. Next, I'm going to play a quick video for Avalara, and then a few moments after we'll say goodbye. Here you go.
The complexity of transaction tax compliance for businesses today is staggering. At Avalara, we offer a lot of powerful tools to help businesses like yours manage tax compliance easily and efficiently. Key to getting the most out of our comprehensive offerings is getting to know the Avalara Compliance Cloud. When you choose Avalara, you can be assured that supporting all of our products is a world-class infrastructure. Avalara's infrastructure is designed to be reliable, secure, and scalable. Our products only provide value if you can easily connect to the systems you're already using. With more than 1,000 signed partner integrations, we're probably integrated with the applications you use today and may use in the future. If you're running a solution we're not connected to, our flexible API and robust developer toolkit gives you a fast time to market. One of Avalara's key differentiators is our deep knowledge and understanding of current tax content, rates, and rules around the world. Our vast tax content database, secure and reliable infrastructure, robust API, and 1,000 plus integrations is what we call the Avalara platform, and is the engine that powers the Avalara Tax Compliance Cloud, the solutions our customers depend on every day. This suite is made up of 6 product categories. These are the categories of products under which many solutions may live. Calculations. Tax calculations are delivered in the blink of an eye by combining the power of our tax engine with our deep tax content and rules database. And we do this for many types of tax and in countries all around the world. Returns. These solutions enable customers to automate the returns and reporting process, from preparation and filing to remittance. This allows customers to easily track various filing calendars, manage requirements for each state and jurisdiction, and offload the payment process. Internationally, we also offer solutions at the compliance forefront with e-invoicing and live reporting. Documents. Our compliance document management solutions allow our customers to efficiently store, track, send, and receive tax compliance documents like exemption certificates and more, and all from the cloud. Licenses. Our business licensing and registration solutions support businesses of all sizes with licenses, registrations, and permits. A key step for businesses in their journey to being government compliant. Fiscal. Our financial and risk management solutions allows businesses to fulfill regulatory requirements for selling in European countries without having a physical presence in Europe. Insights. Our content, data, and insights product family offers customers research tools for a deeper exploration of content and data, and a means of using their sales tax and transaction data to gain powerful insights. We also provide solutions that streamline product classification, from UPC code mapping to international item classification, as well as risk assessment. These are the products that our customers engage with every day, and we hope that by better understanding what they are and our world-class infrastructure that supports them, customers will get the most out of our tax compliance solutions and ultimately the most out of their business. Avalara, tax compliance done right.
All right, so the last thing I would recommend is choose a vendor with a partner that knows you well. SWK and Avalara have worked together for over 12 years, and they can provide their insight from a partner perspective with hundreds of clients of theirs on our platforms. And choose a vendor that is positioned to grow with you, not only to integrate with your systems today, but one that's growing and developing their platform and can grow with you tomorrow. I want to mention that SWK is a certified implementation partner for Avalara, which is fantastic for Stage 100. This is just a great value to have a partner that's trained to help you go live on our solution and support you post go live. And lastly, to learn more, come to our extended webinar on this topic with a shared partner of Avalara and SWK on Wednesday, June 23rd at 9:45 a.m. We are going to spend an hour with BDO, who is a state and local tax advisor. If you have any questions, please contact your SWK CAM or reach out to me directly. Thank you for your time today.